Good day, everyone. After the accounting for service business, we will now proceed to the discussion about accounting for merchandising business. For merchandising business, let's have an example of entities engaged in this type of business. Grocery store, appliance store, and department store. Merchandising business is actually a business in which the entity is engaged in buying and selling of products or buying of products to sell those products. And a very good example also of a merchandising business, which is very common, is the variety store or sari-sari store. Okay, the owners or owner of the business buys goods from the supplier and then put a markup on the cost of the product purchase, and that will serve as the profit of the business. Let us proceed to the major business activities of a merchandising business. These activities are classified as purchasing activities and selling activities. Actually, it depends on the point of view of the activity. If it is the buyer, then it's purchasing activities, and that involves buying of merchandise for resale, buy to sell. And then if it is the point of view of the seller, there is a transfer of title of ownership over the merchandise from the seller to buyer for a consideration. And that consideration is usually in terms of money. Okay. And then these are the account titles that we use for purchasing activities. The purchases, purchase returns, purchase allowances. Sometimes these two are combined. So we have the purchase returns and allowances, and then freight in, merchandise inventory, and purchase discount. For selling activities, we have the sales returns, sales allowances, and sometimes these two, returns and allowances, are combined. So we have sales returns and allowances. And then freight out, sales discount. At this point, let's have transactions, okay, related to purchasing activities and the corresponding journal entries with correct account titles. Okay, so number one is October 1, 2023. CDL Trading bought 50 reams of long bond paper costing 250 pesos each on credit from Rosana Bookstore 210 and 30. So 210 and 30, that's the term. So meaning the account is payable in 30 days. But if CDL will be able to pay within 10 days, then the entity will receive 2% discount. Okay, so what will be the account title? So you have to write in the journal the date, which is October 1, and then account title, debit purchases, 12,500, because that's 50 reams times 250, and credit accounts payable, 12,500. Okay, so that's your journal entry for purchase of long bond paper, okay, from Rosana Bookstore. If cash basis, instead of crediting accounts payable, you will use the account title cash. And this October 1 transaction is evidenced by a purchase invoice or a sales invoice from the seller or from Rosana Bookstore. Okay, next transaction, October 2, 2023, CDL Training returned 2 reams of long bond paper which was accepted by Rosana Bookstore. RB issued a credit memorandum to CDL. So since this is about a return, you can still remember the account title related to return. So we have in our previous slide, purchase return. Okay, so what will be the journal entry? Okay, so we have here, we debit on October 2, accounts payable 500 because that's 2 reams times 250, and credit purchase returns and allowances. Okay, so our account title for the return is not only purchase returns, but it's the combination of returns and allowances. Okay, so purchase returns and allowances. Next scenario is, what if the return was refunded in cash? In our previous slide, the return was a debit to accounts payable, meaning a decrease in the accounts payable of CDL to Rosana. But if the return was refunded in cash, so the debit will be cash 500 pesos, and then credit purchase returns and allowances 500 pesos. Okay? And then next is October 9, 2023, Rosana. Okay, paid Rosana Bookstore in full. Okay, what will be the account title? Okay, we have to zero out the accounts payable to Rosana, and that's 12,000 because initially we credited 12,500 minus 500 returns, so that will give us 12,000. So that will be the amount that will be paid by CDL. So debit accounts payable 12,000, credit purchase discount because CDL was able to pay within the discount period. Okay, the transaction happened October 1, and if paid within 10 days, October 9 is within 10 days, so CDL is entitled to 2% discount. 12,000 times 2%, so that is 240. So that is the purchase rate discount. And then the difference will be the cash payment of CDL, and that is 11,760. Next transaction, October 10, 2023, CDL Trading bought merchandise from NBS on account. List price 80,000. Terms 20, 10, 210, and 30. Okay, question. Is list price the same as invoice price? No. Okay, list price is not the invoice price because in here, in the terms, you will see that there is a 20, 10. So what does it mean? It means 20% trade discount and then another 10% trade discount. So this 20%, 10% trade discounts are to be deducted from the list price to get the invoice price. And this list price is not recorded, the amount of 80,000. What is recorded is the net of trade discount or the invoice price. Okay, what will be the entry? Okay, October 10, purchases 57,600 and credit accounts payable 57,600. So how did we arrive from that amount? Okay, so we have the list price of 80,000 and then from 80,000 we have to deduct 20% from 80,000 and then whatever is the resulting amount, okay, we have to multiply the new resulting amount with 10% and that is the second trade discount. And you will come up with 57,600. And there is also a shortcut to compute for the invoice price. Okay, we have 80,000 times 80%. Why? Because this is 20%. 100% minus 20%, that is 80%. And then 10%, 100% minus 10% times 90%. So this is the shortcut to compute for the invoice price. Okay, just to show you the other computation which I mentioned earlier. Okay, assuming that your list price is 80,000 based on the example. Trade discount, first trade discount is 20% of 80,000 and that is 16,000. And then the second trade discount is 10% of the difference of 80,000 and 16,000 and that will give us 6,400. So if we get the invoice price, it's 57,600. So that's 80,000 minus 16,000 minus 6,400, 57,600. Or if you want to compute it, shortcut, so 80,000 times 80% times 90%, you will arrive at the same amount of purchase. And as mentioned, trade discounts are deductions from the list prices of merchandise. And the reason why there are discounts, like trade discount, is to promote the sale. They are not shown in the books of accounts. If you will notice, our October 10, okay, journal entry does not reflect the trade discount amounting to 22,400. Next transaction, October 19, 2023, paid the total amount due to NBS. Since CDL Trading was able to pay within the discount period, and that is 2% within 10 days, then what will be the journal entry? Okay, you debit in October 19, accounts payable 57,600, and credit purchase discount 1,152. And how did we arrive at that amount? Okay, 57,600 times 2%. Okay, and then whatever is the difference, that will be the cash payment of CDL to NBS. Another topic relative to merchandising business is the accounting for freight. And in here, you have to be familiarized with these terminologies, the freight in and freight out. Okay, freight in, so that's for buyer, and then freight out, that's for seller. And freight in is also an account title, the same with your freight out. In some books, freight in is called transportation in, freight out, transportation out. Okay? And again, relative to accounting for freight, we have the shipping terms. Okay, we have the FOB shipping point, freight collect, FOB shipping point, freight prepaid, FOB destination, freight collect, and FOB destination, freight prepaid. So let us discuss each shipping term because it has an effect on your journal entry. Okay? What is FOB shipping point? What is FOB destination? Under FOB shipping point, the goods are free on board up to the shipping point. So what does it mean? What is free on board or FOB? Okay, free on board is actually an international commercial term that indicates when the risk and responsibilities for the goods being transported shift from the seller to the buyer. And under FOB shipping point, okay, the risk and responsibility for goods being transported shift from the seller to the buyer upon shipment. And with that, the transportation cost should be shouldered by the buyer. Okay? And then how about FOB destination? The goods are free on board up to the point of destination. So meaning the risk and responsibility for the goods being transported shift from the seller to the buyer upon reaching the place of the buyer. And with that, the ownership of the goods while in transit is still with the seller. And with that, the seller should shoulder all the transportation costs. Okay? So again, if it is FOB shipping point, who shoulders the transportation cost? It's the buyer. And then if it is FOB destination, who shoulders the cost? It's the seller. Why? Because in FOB shipping point, the ownership of the goods transfers from the seller to the buyer upon shipment. And then in FOB destination, the ownership of the goods is transferred to the buyer upon reaching the place of the buyer. So meaning, while in transit, it's still the seller who owns the goods. Okay? Next terminology is freight collect and freight prepaid. Freight collect, it's the buyer who pays the transportation cost of the merchandise purchased up to the point of destination. The buyer pays the shipper, okay? In freight collect, the buyer pays the shipper or the courier. In freight prepaid, the seller has paid the transportation cost of the merchandise purchased up to the point of destination. It means that the seller is the one who paid the shipper, but it doesn't mean that the seller is the one who will shoulder the transportation costs. Okay? It's just that the seller pays the shipper or the courier. Okay? So let's have an example to illustrate these shipping terms. Okay. October 20, 2023, purchase merchandise from NCR Trading on credit. The invoice price is 100,000 and the transportation cost from NCR to CDL is 5,000. Okay, assuming that the shipping term is FOB shipping point, freight collect. So in here, FOB shipping point, it means that the buyer should shoulder the transportation cost, and then freight collect, meaning it's the buyer who pays the shipper. Okay, so what will be our journal entry? Okay, so for October 20, we debit purchases 100,000 and credit accounts payable 100,000. So how about this 5,000? How do we treat this and how do we prepare journal entry? So since FOB shipping point, okay, it's the buyer who will shoulder the transportation and therefore the buyer should book freight in, okay, or should record freight in its journal or books of account. So debit freight in 5,000 and credit cash 5,000. So this credit cash, it means that the buyer pays the shipper the transportation cost, and at the same time, it's the buyer who should shoulder that transportation cost. Okay, so that's FOB shipping point freight collect. Okay, what about if the term shipping term is freight prepaid? Initially, it's freight collect. So meaning it's the buyer who pays the shipper. So in here, freight prepaid means the seller. pays the shipper, but the transportation cost should be shouldered by the buyer. So what will be the journal entry? Okay, so debit purchases 100,000. Okay, debit freight in 5,000 and credit accounts payable 105,000. Why? Because when the seller paid the shipper 5,000, it means the seller has a receivable, additional receivable to CDL amounting to 5,000. And the point of view of CDL, so it should consider, okay, additional accounts payable, okay, to NCR. So from 100,000, it's now 105,000, including freight in of 5,000. Okay, next scenario, FOB destination. We learned that in FOB destination, it's the seller who should shoulder the cost, the transportation cost, and then freight collect, meaning it's the buyer who pays the shipper, but the transportation cost should be shouldered by the seller. So how do we prepare an entry for that? Okay, so in the books of the purchaser or buyer or books of CDL, debit purchases 100,000 and credit accounts payable 100,000. Then another entry, debit accounts payable 5,000 and credit cash 5,000. Why? Why accounts payable? Since the freight is not chargeable to the buyer and the buyer pays the shipper the transportation cost of 5,000, so meaning our or CDL Trading's accounts payable to NCR will be decreased by 5,000. No freight in will be recorded in the books of CDL Trading because it's FOB destination. Okay, so the freight should be chargeable to the seller, okay, and not the buyer. Next scenario, FOB destination freight prepaid. The seller should shoulder the transportation costs, and it's also the seller who pays the shipper. So what will be the journal entry in the books of CDL Trading? So debit purchases 100,000 and credit accounts payable 100,000. So 5,000 transportation cost. So ignore that if the term is FOB destination freight prepaid. Okay? Here's the summary of the treatment for transportation costs. We have here four freight terms, okay, who should shoulder the transportation and who pays the shipper. We know that if it is FOB destination, it's the seller who should shoulder the transportation, okay. But if it is FOB destination freight prepaid, who pays the shipper, okay. If it is freight prepaid, it's the seller who pays the shipper. And then if it is freight collect, it's the buyer who pays the shipper. Meanwhile, if it is FOB shipping point, based on our previous discussion, it's the buyer who should shoulder the transportation. And just like our previous discussion, as we mentioned earlier, freight collect, the buyer pays the shipper. Freight prepaid, the seller pays the shipper. Okay, let us move on to selling activities or the activities point of view of the seller. We will use the previous transaction to illustrate the selling activities. Okay, let us have here the first transaction for the month of October. This is the point of view of the buyer. Okay, assuming that CDL Trading purchased items from Rosanna Bookstore. Okay, if it is the point of view of seller, okay, so the transaction will be Rosanna Bookstore sold 50 reams of long bond paper at 250 pesos each on credit. What will be our journal entry? Okay, since this is on credit, we will debit accounts receivable. How much? The same, okay, as the purchasing activity debit entry, okay, 12,500. Okay, and then we will credit sales, okay, because that's a revenue. Okay, credit sales, 12,500. To record sales on account, 50 reams at 250 pesos each. Okay, so this is the journal entry for Rosanna Bookstore, okay, which is the seller of this long bond paper. Okay, let's proceed to the next transaction. October 2, 2023 is about the returns of return of long bond paper by CDL to RB. And this was the journal entry prepared by CDL. Okay, the question is, what will be the journal entry for Rosanna Bookstore? Okay, so for October 2, the entry will be debit to sales return and allowances. Okay, same amount, 500. And then credit accounts receivable, okay, 500. Okay, so to record return items of CDL, okay, 2 RIMs. Okay, so that's our second transaction related to return of goods or items. Related to the return, what if the return was refunded in cash? If the point of view is the buyer, then the debit is cash, 500, because the purchaser or the buyer will receive cash from the seller, and then credit, purchase, returns, and allowances. What about for Rosanna Bookstore? Okay, what will be the entry for that return? Okay, refund in cash. So debit, sales returns and allowances, 500, and credit, cash, 500. Okay, how about the next transaction wherein the buyer paid Rosanna Bookstore in full? So what will be the journal entry for the seller? Okay, since Rosanna received cash from CDL Trading, okay, the debit will be cash, 11,760. Debit sales discount, 240. And credit accounts receivable, 12,000. So you will notice that the entry of the buyer and the seller, okay, are almost the same. It's just that in the credit side of the buyer, okay, which is 11,760 to 40, you will notice that it becomes the debit of the seller. And then the 12,000, okay, okay, also present in the entry. So instead of accounts payable for the buyer, it's the accounts receivable. Okay. Next transaction is related to a purchase of merchandise with list price, okay, and trade discount. So you already know what amount should be recorded in the journal if there is a list price given and trade discounts. Okay, you already know that it should be the invoice amount wherein you deducted trade discounts from the list price to get for the invoice price. Assuming that it's the point of view of the seller, what will be your journal entry? Okay, so you debit accounts receivable instead of accounts payable if you were the buyer. Debit accounts receivable 57,600 and credit sales 57,600. Okay, next. Okay, next transaction is related to payment of the buyer to the seller in full. Okay, we have here the entries for that transaction payment to the seller. You debit, if you were the purchaser or the buyer, you debit accounts payable, you credit cash, and you credit purchase discount. Okay, for the seller, okay, what will be the entry? You debit cash, 56,448. You debit sales discount, 1152, and you credit accounts receivable, 57,000. So the side, okay, just reverse. So meaning the entries, okay, under the credit column of the buyer becomes the debit column of the seller. Okay. Okay, let's move on. Okay, how about accounting for freight? Okay, the point of view of buyer, we already discussed this earlier, and we already know the journal entry if the term is FOB shipping point freight collect. But what if it's the point of view of the seller? What will be the journal entry? Okay, so since the invoice price is 100,000 and the shipping amount or transportation amount is 5,000 and the shipping term is FOB shipping point, meaning the buyer should shoulder the transportation cost and it's also the buyer who pays the shipper in the books of the seller. So that will be ignored. Okay. So you will only record debit accounts receivable 100,000 and credit sales 100,000. Again, if the term is FOB shipping point, freight collect, if you were the seller, ignore it because it's the buyer who will make the entry in his or her book or in their books. Okay. What if the shipping term is FOB shipping point freight prepaid? Will you also ignore this? Okay, definitely not because if it is freight prepaid, the seller paid the shipper or the courier. So with that, in its books, the debit will be increased by 5,000 pesos because that includes the transportation cost in which the seller initially paid the amount to the courier or to the shipper, which should be chargeable to the buyer. Okay, so accounts receivable 105,000 and credit sales 105,000. Next is FOB destination freight collect. We learned that if it is FOB destination, it's the seller who should shoulder the cost. And with that, if it is the seller who will shoulder the cost, the seller should record freight out in its books. Okay, then there is a freight collect, meaning the buyer pays the shipper. So with that, the buyer should reimburse, okay, the freight it paid to the shipper or courier. So let's check the journal entry in the books of the seller. Okay, so debit accounts receivable 100,000 and credit sales 100,000. How about the 5,000 transportation cost? Okay, freight out or transportation out 5,000 and then credit accounts receivable 5,000. Okay, so with this entry, credit accounts receivable, since the buyer initially pays the freight, okay, so definitely its account, okay, will be decreased, or its accounts receivable, the accounts receivable will be decreased by the same amount. Last shipping term, FOB destination, freight prepaid. FOB destination, the seller shoulders the transportation cost. Okay, freight prepaid, it's also the seller who pays the courier or the shipper. And then let's move on to the journal entries for the 100,000. Okay, it's the same debit accounts receivable since the transaction is on account to CDL 100,000, credit sales 100,000. How about the transportation cost or the freight? Okay, debit freight out because it's the point of view of the seller, it's freight out 5,000. And since in FOB destination, the seller shoulders the transportation cost, so that is an expense. And then freight prepaid, the seller pays the shipper, or the seller paid the shipper or the courier, and with that there is a credit to cash 5,000 pesos. Thank you very much, and these are my references. Don't forget to subscribe to my YouTube channel. Thank you.